Analysis on the stock market, projections on the S&P 500, some important information. This is a slide that's really important for you to read. It talks about our approach to analysis of the markets and how you can best use that. Stock market, S&P 500, SPY, cycle analysis and projections, and I'm going to use my proprietary level 4 studies. That's what's included in this special that we're offering right now for just $99, non-recurring. So I'm going to show you our charts. I'm going to switch over to the charts of the SPY. That's the ETF for the S&P 500. So this is our cycle analysis chart. And what this shows you is how we do our analysis, starting with just a blank screen, essentially, just a chart. This is a weekly chart. And then putting in all of this artistic work that you see that really gives us a great sense for the money flows in the market, the conditions in the market. And I think that you will find this to be the best way to really understand markets of any way. On the bottom here, cycle brackets. And what those show you are the rhythms in the market, or the heartbeat of the market. And you can see there is a rhythm in the market and how the chart actually follows that movement in here. We were looking for a 5.3 to 8% correction in here. It was 5.9% on the downside. And this is our reversal scout. This is one of those level 4 proprietary indicators that you can get if you're a level 4 member. And I'm just going to zoom in a little bit right here so you can see what we're looking at now. This is that next rising phase. Our indicator here has turned up, telling us that momentum is moving to the upside and other flows of money are coming in to the upside. And these are our upside projections in here. And we've been talking about 540, something like 5,400 on the S&P 500, or 550 right there. It's 554, so that would be 55,400 on the S&P 500. That's the upside projections that we have in here. And early in the show, I talked about the limitation to the upside for a lot of reasons. These are the monthly extensions, and those create resistance. And the upside valuations that are now approaching 190% of GDP. That's after we've had economic growth. The high of the valuations was 199% of GDP historically. That came at the peak of the last bull market. I'm just going to go back and show you where that peak was, way out over here. And that was the point where we had, of course, a big stock market move to the downside. So where we are right now is clearly in a bull market, moving to the upside, momentum strong. This is the 34-week moving average, which is our really dominant moving average that we look at. And often there's a test of that, or the 13-week moving average, which is right here. In very bullish occurrences, it only gets below the 13 and not to the 34, and that's what happened now. And this is that key cycle low right over there. So without a break of that level, which is pretty far away, we consider the market to still be in a bullish condition. So everything on here on the weekly chart does look positive. Now, I want you to see out here. You see this note here, potential large drop in Q4 of 24. Here's election day right there, November 5th of 2024. I don't know if these are related, but it is possible that they are. Additionally, if there was a pullback in here, here's your minor support. So that's how we have this all labeled in here. And what we see is that these periods of risk, which are when both of these cycles are moving to the downside together, we call that the nesting period right there. And if I just go back on this chart, you can see each of those nesting periods brought sharp declines in the market. 10 to 20 something percent. That's where you get the big drops. And that comes out in the Q4 period here that we're looking at. So for now, we're only in May, we're looking for potential, pullback or modest pullback over here, as you see right there, that takes you out into the summer. And then probably another rally that gives you a peak out here in late summer, early fall, and then into that risky period. So that's kind of a longer term look at the S&P 500. Remember, if you want to learn our cycle analysis, go to our workshop tab and you'll be able to see a free video on that, on some basics about cycle analysis, and it's really worth taking a look at. So that is the weekly analysis. It's strong. It's this that has dominance over the daily analysis I'm going to show you. So you get messages back and forth between the weekly and the daily. And in this case, this is strong, and you're going to see that the daily analysis right here is also strong. So what we do is we look at the cycle rhythms, the energies in the market. And we have a very clear 24, 25-day cycle that you see here. That's the black cycle bracket on the bottom, and it helps us see that movement in there. There is another out of phase one that looks like it lines up and creates some similar energies. And normally a bigger cycle like that would be dominant. Now I don't see a lot of dominance in here except when they came down together right over here and came down together right over here. So we're watching this one to see if it has an effect on it, and let's just look over here. And what we do is we build these projected clouds. In other words, when it's pretty strong, it'll move up into the upper cloud over here and then move up into the projection. So this is at 540. This is the lower monthly extension about 543. And that's why the upper side here is projected in there. So in other words, you could see the shape in here, super bullish. Now this is the slim ribbon right over here. And the slim ribbon is giving you a positive indication. Now if you look at when the slim ribbon is positive, and I'm going to look back over here, here's your positive ribbon, all of those, and the slim ribbon giving you the support, which it often does. And when you get these modest corrections in these very bullish cycles, you get into the slim ribbon and then begin to move up again. We actually have that exact occurrence right now, where we have the positive slim ribbon that returned over here, and then this swamping condition where the weekly pressures are so strong, it keeps this from actually correcting. And you can see we had one big sharp down day here, and potentially to come down and test those lows, get into the slim ribbon, maybe this 23% correction right over there. But if they get one or two more down days in here into early next week, that's really the worst of it that we see, and then we see it moving up. Once that's established, we'll have an anchor point. And then we'll be able to put in a more precise cloud in here, but this is pretty close to what I see moving forward. So again, we'll be looking for the upside. But once this low is established, that's going to be an important level. And if it's established and then moves up as we expect, and then comes down and takes out that low, it would be a really negative occurrence. So right now, there's no reason for us to expect that. The only question we have is, will this come down and test this low over the next couple days, and then give you that anchor point set, and then begin moving to the upside again. So you could see that what we have in here is a positive slim ribbon, which gives you that look at the upside momentum that aligns with what we showed here on the weekly chart with that upside momentum. And all of this is positive, and there's no reason to look at anything but positive occurrences based on this, because that is the highest probability, and our analysis is probabilistic. So that's what we see in here, looking at the SPY, the S&P 500, on the weekly and on the daily. Now let's look at the daily in a little different way. This is the option bias study, and this is a very unusual study. This is a level 4 study for our members. And this is built in a way that it is built on multiple time frame momentum conditions. And what it tells you also, based on a volatility variable that goes in there, is when the market is in really good shape, when it's slightly overbought, when it's very overbought, or the opposite on the downside. So here you could see through this whole period, December, January, February, March, all of those was giving you conditions that your options should be biased to the long side. That's what that means. That is a P3 reading, as you see that right over there. And I get the P3 showing here. There it is. See that 3? That's a positive 3 reading there. Here you have yellow where it went neutral. It went negative for a little while during these periods in line with what was happening with the negative slim ribbon. And then it turned positive, and here you could see again telling you to bias your option positions to the long side. So this is a bullish condition that exists right now. Now we're going to look at the slim ribbon right over here and the slim ribbon PO. Slim ribbon PO is a fantastic indicator because it tells you not only when the slim ribbon is positively configured, and that's when it's green over here, and you could see the slim ribbon built into that, but also when it's likely that momentum will resume on the upside after some modest correction. And you can see that happened in each of these little dips in here. The slim ribbon gave you a signal it was going to resume to the upside. Here is where it turned red in here, and it gave you a downside signal right there that was quickly negated to neutral. As you see, this turned blue right there, and then it turned green again. And you can see what we're getting here, the upside arrow, which tells you that the market is likely to be resuming to the upside. Now, of course, that doesn't mean there won't be wiggles and little pullbacks, but at the same time, it does give you a great indication when you look at the option bias indicator, you look at the slim ribbon PO, again, all level 4 indicators, that the market is certainly in good condition, and the highest probability is that it will have an upside bias as we're looking in the market. So no matter what you hear me say about valuations or limited upside or any of that, all of these indicators are saying for traders, people that are engaged in the market in a relatively short-term basis, let's say over days or weeks, that the indicators are saying the market is in positive shape, pretty clear. This is a very unusual chart. In fact, on the bottom here, we have our market condition indicator. And when it's up in the 90s or near 100, the market's in fantastic shape. When it comes down here and gets into the positive 25, between that and negative 25, it's testing the market. This is built on multiple time frames, also with a heavier weighting to the longer time frames. So if the market is in good condition and it corrects and tests the zone and then moves up on the upside again, it gives you a positive reading. So this is another level 4 indicator, and it then gives you this great reading that says the market is positive. And that reading came over here, and that was right here. This is a 2-hour chart. And what's unusual about it, and we teach how to create these cycle patterns, this has the daily cycles built on a 2-hour chart. And I've enveloped it to show you these daily cycles in here. And this comes right out of the cycle analysis primer, which is Profit Magic of Stock Transaction Timing by JM Hurst, which is what I read 49 years ago, actually. And that really started me off on this style of analysis. So he envelopes everything. We just put in the top cycle line in all of our charts. And you can see in here where we are is that this cycle over here, as we showed on the daily, is coming down near its end right over here and likely to turn up again. So you see he had the big downside move over 3 bars or 6-hour time period. You're getting this little rebound on Thursday. We don't know whether that's going to hold. We had the bullish slim ribbon PO turn neutral in here. So it might mean that you get a little more corrective period over here over the next, day or two, and then likely to be in this rising phase over here, just as we showed on the daily chart. So there's your daily chart with that cloud pushing, showing us the next move is likely to the upside. And here it is overlaid on a 2-hour chart right there so that you can understand it along with the market condition indicator, the MCI as we call it, turning positive. And this may be a little more correction, but then probably moving to the upside again, with the indicators all showing positive as we look at that. So I'm just going to show you what this looks like if I was looking at all 4 of them right there. That's everything I just showed you. I'm just going to blow them up, and this is how we look at it right over here as I just click an arrow, and it takes me through all of that. So that's the look at the SPY, and basically what we're talking about are bullish conditions still existing in the market. SPY cycle analysis, multiple time frame analysis with our proprietary level 4 studies. I hope you found that very interesting. And of course, we monitor this every single day. And when things need to be changed, we change them for our members, and they see updates on these regularly. So that's what I had to share with you on the stock market today. Remember, our level 4 top tier special trial is going on right now. It's only $99 non-recurring. You get everything in here, including our market condition indicator that has all of those, a market condition monitor, which has all of those indicators built into it. And you will be able to see market conditions and get notifications. So it's fantastic. $99 for level 4. And don't miss this one-time use opportunity. And again, it's not recurring, so you don't have to worry about it being renewed on you. We'll be sending you a special. You'll be able to stick with us if that's what you want to do. So really worth taking a look at with this special for level 4.